So welcome to yet another webinar. This one for the public. We're joined by over 30, 35 people so far, and I'm sure people will join as we go along. As I've said, any questions, feel free to throw them in the chat, and let's just crack on, shall we? So we'll start with the opening chart. Just let me know, can everyone see the EURUSD chart right in front of you? Yeah, perfect. I'm just gonna put the chat, like I said, I'm just gonna minimize the chat, put it down to one side. Yeah, just one side over here. And then that way we can keep the charts nice and open. So we'll start off with, we'll just like put a vertical line where we've started the week. So starting the week, started the week roughly just about here. Okay, so we're going to break down from then onwards a good amount of trades, really. I think roughly 4 or 5 trades, hopefully. We'll see what we can find. But first of all, when starting off with any chart, so, one big major sort of lesson, if you will, really for everyone, it doesn't matter what style you trade. In my opinion, it's always been, and as you may have noticed from the original YouTube video I ever uploaded, the Monday Masterclass on structure, that was probably, it's still to this day the most popular video I have on YouTube, and it's probably one of the biggest videos I've ever received feedback on as well. Which to be originally I was surprised, because I thought structure, it's very common and probably one of the earliest things you learn, very simple technique, right? But now when I look back, I realized that it's very, very, the reason for such feedback. And it's very simple, and it happened to me, and that was the whole reason I did that structure webinar, was simply because I had forgotten over time just how powerful and important structure is, because it really just gives you the direction. It really just gives you the where the momentum is in the market. It helps you to sort of navigate as well the higher and lower time frames. Don't get me wrong, there is just like with anything in trading and anything obviously that you choose to master, there are still going to be parts and elements of it that are more advanced, that take time to develop an eye for and develop your skills on, such as sort of intertwining the lower time frames with the higher time frames. But to begin with, I would just like to say to every single person in here, if you are struggling with trading, if you are maybe getting inconsistent results, the first thing I can tell you to focus on 100% would be structure. Just spend time on structure, spend time on trying to learn and adapt and sort of train your eye, if you will, to structure, understanding when we have structural breaks, the different time frames, especially obviously trying to understand when the lower time frame intertwines with the higher one. And if you haven't already, go check out the structure webinar and YouTube video I uploaded. I uploaded probably over a year ago now, but I would definitely recommend go watching that if you haven't already. And if structure is something you struggle on, go watch that. It's there for you to watch at any time. But just to kind of go off the back of that, the reason I mentioned that is because that's the first thing we'll do going into, going on the charts, essentially, going either into a new week, even a new day, is just keep an eye on structure. Where are we structurally? So we're going to start off with actually going from a higher time frame point of view. So we are in October now. So we've just finished Q3 and we've now started Q4. So if we look at the previous quarter before that, so what would have been April to June, if I'm not mistaken, April to June, Q2. Look how we closed. The month before that, previously, complete bearish candle, almost engulfing. It would have been nice to close a little bit lower, but that, quite a bearish candle there. Going to the right of that, we then had a shooting star candle, if you will, which we basically just understand to be, bearish pressure, bearish sentiment. So another bearish candle. And then coming into this last quarter, we have now closed bearish engulfing the previous body anyway, breaking the lows. So, really what that tells me personally is that we should see lower prices come towards throughout this quarter. It doesn't mean we're going to completely go bearish as we've seen this week, but what it tells me is that eventually we should see lower prices than the last quarter, at least coming into this region. You can see previously this is a key level for this pair on a quarterly time frame, probably monthly as well, I'd imagine, just here. Previous resistance, now holding and held as support, previous resistance broken above, and we could see price come back there. So we are good good amount of pips away from that, to be fair. At the moment, roughly 300, 350, which for the EU is a lot of pips. So, it's a lot of movement that we have, and that's my personal sort of view on it, if you will. As we go down to the monthly time frame, we can see again last month a very engulfing candle, very bearish in its closure. And we can see even more clearly monthly key level there that price hopefully should be drawn towards. And we may not see it. I don't think we'll see it this month, being the first month of the quarter, but I think we definitely will see it moving into probably November, if not into December. But we'll get into that a bit more as well. Talking about that, actually, we move back quickly on the quarterly. You see this sort of previous support that held price for almost the whole year so far. So the past 3 quarters and the last quarter of last year, essentially where price was kind of stood still, and we have that void still. Potentially we could see price come back to where is that actually, 1.7 potentially. We'll check where that is on the monthly chart, roughly this sort of region as well, and then we'll go down to the weekly and we'll see that 1.7 is literally just about this weekly order block here, where we see price impulsively breaking the lows that were formed. Not only just this low, we actually ended up breaking these lows to the left as well, which was really holding price as bullish. So overall, when we're talking higher time frame structure so far, quarterly, monthly, and weekly, all bearish in its sentiment. Nice order block there on the weekly that we'll keep an eye on for in the future, hopefully. We've seen price now slow down from last week and this week, so the first 2 weeks of the quarter so far, and this month so far been sort of a slowdown in price. We've still got obviously another day, so Friday tomorrow, to play out on this weekly candle. You'll be surprised how often a candle can change in one day. So even saying that, we started off yesterday very bearish at the low of the week, and already we've created a high of the week today. So at one point this candle was extremely bullish. So it'll be very interesting to see how we close. If we close similar to where we are now, I would say great, slow down in price, and I would hope to see price pull up over the next few weeks potentially. If however we close bearish, then I would see price continuing down, and we'll see that continue as we go through the time frames now. So going into the daily time frame, very nice. We obviously have a minor structural high here, that 1.7 lining up very nicely actually with this order block here on the daily. You can see that price could just pop over potentially, so we'll have to see about that. But for now, let's focus on where we are right now. So recent low, or a recent lower high, should I say, price is respected so far. And yesterday, very bullish day, engulfing actually the previous 1, 2, 3, 4 previous daily candles. So showing a lot of bullish momentum there. So it'll be very interesting again to see how we close. If we can close anywhere around this sort of region in the middle here, I would say that we are going to have that pullback, over the next week or 2, maybe even 3. Euro USD likes to be a bit choppy, likes to be a bit slow, and the amount of liquidity that would then build for a particular larger move would be quite nice. So that's what I'll be looking out for. But yeah, again, a lot kind of boils down into what we're going to see when it comes to tomorrow's weekly close and how tomorrow plays out. Going into the 4 hour, once again we can see this structure to the left, our last lower high, if you will. We'll just actually check that, to be fair, first of all. So using the Fibonacci, we can see that we did come into a premium price above that 50%, so premium price. We did take out the weekly low, which we're going to talk about as well. We can talk about when we dissect some more trades, or we actually get into dissecting trades. We haven't even got there yet. I feel like I'm stalling. I should probably just jump into it. But I'm just trying to give my actual price prediction and sort of understanding of price first before we jump into it. So we can see again that impulsive move yesterday, very aggressive, still not been retraced into. So maybe tomorrow we could see price actually dip in, fill this imbalance, get into this order block on the 4 hour, maybe even the slightly lower time frame, maybe, which we'll take a look at in a moment. We'll hopefully see that price close roughly around that sort of discount level and this key level here, as we can see on the 4 hour, very nice and clean there. So that's what I'm looking for. It'll be very interesting to see how that plays out and see how this this webinar sort of plays out in time and age as well, hopefully. And hopefully that call will come through. But anyway, let's jump into the breakdown, shall we? No more stalling, no more wasting time. That's not what my plan was, but it seemed like it, doesn't it? But let's take a look. So already we can see at the back end of Friday on the New York session, just pre-New York here, we can see price came into this hourly order block. Okay, so very nice and clean hourly order block, which we can then actually break down. I'm just going to bring it down a bit. We can actually go down into the 30-minute, and we can reduce that down ever so slightly to this last block here, where we see that impulsive move. Very slight imbalance left as well. But either way, 1 hour and 30-minute order block there. Okay. I prefer using sort of a bigger block, to be fair. So you see the difference isn't massive, right? And I would probably use my GAN box as well for high time frame block. Now, however, we can see though, if we now zoom into price, we're going to drop down to the 15-minute here. So we can see we're already bearish overall. We had our impulsive move to the downside. This is in our premium, as we've already just looked at previously. Very clean trade here coming into the London session of Monday. Now, me personally, many people know already, especially the Vipers, but many people probably have noticed if they've been following me a long time, is I'm not a big fan of trading Mondays normally, but this particular move is so clean when it comes to its breakdown and its analysis, which we're going to see now. So we can see, obviously, we've left the high of the week and day. Actually, I don't think it's the high of the week, actually, just to confirm. Let's go back. It might be, actually. Yeah, it might be. But more importantly, high of the day from the Friday. So high of the day there. It might have been the week as well, actually, to be fair. So I think it's obviously, yes, it is. So yeah. So high of the week and day. So large liquidity grab there. On top of that, we also then have our trendline liquidity rolling across here. Just 1 second. Trendline liquidity rolling across here. So a nice buildup of liquidity already. We're seeing this higher lows, higher lows. Now, what we can tell with that is obviously there's going to be a lot of stop losses for those who are buying here. A lot of people might be anticipating, a more deeper retracement at the least, or maybe even a reversal. Bear in mind that the markets work on fear and greed. So, when we see complete bearish candles, a lot of people who've probably been stopped out from sell moves start to buy. Because they're thinking price can't go any lower. Price can't go any lower. They start to buy. So in this case, they're probably buying. It's working out for them. They're seeing profits. Probably held over the weekend. Probably thinking, okay, we're going to break to the upside. We're making high lows when it comes to structure. But you can see we've left an imbalance here, right? We can also see that price has built up that liquidity. Just gone up a time frame quickly. Sorry, to just mark out this order block right here. Okay. Which, as you can see, market just comes shy off later, but we'll get to that in a moment. As we go back, I'm going to bring the bar replay, actually. Move out the way. Yep. I'll just bring the bar replay back as well, so we're not scrolling half the time on the webinar. So just bring it back to here. Okay. So yeah, build up of liquidity. We've also can see quite clearly our equal lows here. And equal lows here, so nice amount of liquidity again added to that. So when we start to sort of incorporate, not only that we have our trendline liquidity, not only do we see price slowing down at this order block from the 1 hour, in line with the overall structure that is bearish at the moment, we then see obviously equal lows being formed. We've left a New York session low here, also liquidity, Asia session low here going into Monday, as well as now we've taken going into London Asia high, right? Previous New York session high as well, and equal highs. So really, when it comes to a textbook trade, this is probably as textbook as it comes. And that's why I said, no, usually I wouldn't trade Mondays, but with a trade like this, it's like I said, it's as textbook as it comes. It's so clean when it comes to its analysis that it makes sense. Now, when you're probably thinking, how do you enter this? So obviously you have two options. You have the option of using the actual order block from the 1 hour here. Now, using a GAN box, that would definitely tap that 50% mark, and therefore you'd probably have an entry along the lines of this. But we're going to go into an actual lower time frame entry for this trade because it makes sense, and more importantly, that's what we would look to do. So when we're talking 50% mark, we've got about a 5 pip stop. And as we can see, that will give us even to the low. So taking out the trendline liquidity, those equal lows, targeting that New York session, a 1 to 6 roughly. Now, even if we were more conservative, using just the 1 hour block as our entry, and then stop loss just above. So we're talking about 10 pip stop. And let's keep it around numbers. So 1 to 10 there, and then 10 pip stop. And we're looking to the low, 1 to 2.5. So really risk to reward wise, for especially as Vipers, isn't something we would look. 1 to 3 is an absolute minimum in my opinion across any strategy. A 1 to 3 risk to reward should be an absolute minimum in my opinion. Don't get me wrong, I know traders who are out there, probably, I don't know them personally, but I'm sure there are traders out there who probably have a 1 to 1 risk to reward, 1 to 2, and they're profitable. So yeah, it's absolutely fine. I'm not trying to put them down or anything, but me personally, 1 to 3 should be an absolute minimum, and a 1 to 5 is ideal. Whereas in that case, it doesn't matter that the price is tapped the 1 hour OB before. So no, with the 1 hour OB, it's not ideal that it's tapped already. However, when we're talking liquidity, it's really the liquidity that gives us a lot more confidence with this trade. That's why I wouldn't enter using just that 1 hour. I'm just trying to show that it's possible. Because to be fair, if you were using the 1 hour, you would have been tapped in from the Friday. And if you're going to get a result like this, then you would have held over the weekend as well. So those scenarios aren't ideal. However, going into the real reason for this particular trade, how I would enter this trade, obviously we have this liquidity, as I've already mentioned, the daily high taken, weekly high taken, equal highs taken, previous New York session and Asia high taken. So a lot of liquidity taken at this point. Slow down in price, build up of liquidity to the downside. So let's go down into our lower time frames now. So there are multiple actual entries there. I think there's at least 2 entries for this particular trade. One being not even aggressive, but from the high, and then one being slightly lower as price continues to go down. Sorry, that is actually previous one. So we'll just move to here. I'm just gonna bring the bar replay back a little bit more so we're not scrolling once again. Just 1 second. So many windows open. I've got this. I've got the video chat there. I've got the bar replay there. I've got the actual chat over there, and then we got the toolbar over here as well. So we've got to manage them all. We'll bring the price back to here. Okay, so as we can see from price, we can see now on a micro level, so on a 1 minute time frame, we can see that we have equal lows once again. So yeah, even on a smaller time frame, building that liquidity. I'm just going to get rid of these ones from a higher time frame just to keep things nice and clean for us here on the charts. So you already know what we've gone over so far. We can see the equals there. We can then see again build up of trendline liquidity, slow down in price, right? So price is already beginning to slow down as we're taking that liquidity of the daily and weekly high. Bear in mind, taking that Asia high, taking that New York high. So all that liquidity you already mentioned, we can see price slowing down. What do we get next? We see an impulse move, breaking the minor structure to the left, right? Now, a lot of confidence for taking this move will come from the price leaving that equal low, as well as all those high time frame competences. But when we see this impulse, this is a very strong indication of those bears coming into control. Now, after that impulse, we then see our corrective pullback, slower, much slower compared to our move down. Now, in this case, a lot of people might have had this as an order block, for example, this first candle. However, you have to realize that price is balanced out here. So where do we see our first void? Here. Our first part of the void, our aggression, if you will, our impulsive move. So here's our order block. Now, from here, again, slower corrective pullback also gives us that confidence alongside, more importantly, this higher time frame. So for me, 3.5 pips. So leaving that half a pip difference. I'll just make sure this is accurate as well. Make sure it's on the top. But half a pip difference on the top of the for the stop loss, and then just below the for the entry. So you can see 810. It's a nice psychological number there, and again leaving that half a pip. So we've got 3.5 pips there. So even towards, say, for example, where we impulse from in Asia, alone, again, gives us that 1 to 2, 2.5. So for me, that's not where I'd be looking to close anyway. It's where I'd look to manage a trade, like sort of keep an eye on the trade, because that is where we sort of impulse from. That is the bullish order flow for this particular time frame. However, a lot of that confidence to hold a sort of trade and take this trade in the first place came from that higher time frame. And at the very least, we'll be looking to target that Asia low. Okay, so that Asia low, just make sure it's in line, gives us at least a 1 to 4.5, and then taking those equal lows is where we then get that 1 to 5, which is very, very nice indeed. Now a lot of Vipers take off a lot of their trade at 1 to 5, for example. Some actually just take 1 to 5s, which is great to see. A lot of consistency built that way. But then holding this trade down to our low, so even as I said, the start of our trendline liquidity and equal lows and that New York session will give us that 1 to roughly just over 7. So yeah, that's a beautiful way to start the week. Now you have to keep in mind, so one lesson for you, if you will, is let's say you're using a 1 to 5 method. With a 1 to 5 method, you get an opportunity where if you take, say, one trade a day as an example, and you take this trade on a Monday, you get that 1 to 5. Even if you lose every other trade of that week, even if you lose every other trade, Tuesday, Wednesday, Thursday, Friday, you'll still have that, say, if you're risking 1%, you still have that 1% profit, even though you only won one trade and lost 4 for that week. So just keep that in mind. That's the power of risk to reward, right? That is the power of risk to reward. That is why you have to think in terms, as well as your time. You know, is your time worth, say, 1 to 2 trade or 1 to 1, right? You need to sort of evaluate these things. But you know, for this particular trade, let's say, for example, you held for 1 to 7, very realistic return, very doable, achievable, hopefully, as you've seen in this case. So 7% return. Are you done for the month, for example, or at least that week? These are the sort of questions you want to ask yourself. In that case, the lows to the left broken with that aggressive move are considered as a break structure. Any micro low structure? No, not any micro low, because obviously you can imagine how often the lower time frame comes into play. Really, again, the confidence is we see the impulse, we see the microstructure broken. Yes, as I mentioned, the higher time frame, knowing what's happening on the higher time frame with the higher time frame structure is where a lot of the confidence will come from taking a trade like that, right? Because otherwise, let's say I'm sure looking at this price action here, we'll probably see microstructure breaks here, or even especially over here, especially with this sort of price action here. Does that mean we just take a trade? Is that considered just a break of structure? No, it is a confluence, but it's about the basket of confluences we've gone over. We probably just spent, I don't know what time it is now. We probably spent about 15 minutes on this one trade, for example, of which the entry was only about 2-3 minutes of it. The rest of it was all going over all the confluences from higher to lower timeframes. So it's more importantly, the combination of the higher time frame confluences that gives us that confirmation of, say, that micro breaker structure being confident behind that. Otherwise, it's just, as you say, a micro breaker structure. So there's not much weight behind it without all those confluences. So that's one way of entry, right? So that was one trade towards that target. Now, more confirmation based. So it's kind of a good question, actually leads on to this quite nicely. More confirmation based, we can see that price comes down. So there's one order block. Confirmation base wise, we then have this order block here. Again, by now we're seeing bearish order flow. So we're seeing the low get taken. Okay, from here, low get taken to the left. We can see that price has impulsed, slowly pulled back, trendline liquidity as well on a micro level, and order block. So the same exact rules. If you think about it, it's the same exact reason for entry as well to the left. However, this one has slightly more confirmation behind it because by this point, we've broken the major low to the left. We're respecting bearish order flow. And if I'm not mistaken, let's check 5 minute structural low is broken as well. Mainly over here, actually. This low, I think maybe left equals, which is another confluence to be fair. So yeah, another confluence to be fair. But yeah, that's another entry. Exact same way, exact same understanding, exact same reasoning as well. Impulse, corrective pullback, so slower pullback, showing the intent, respecting the bearish order flow, and we get ourselves yet another trade. Okay, so entry wise, 750, a nice psychological round number just below our order block. And then for this one, even if you use 2, which I think is only about 0.3 of a difference to the actual order block, even if you use 2.5, right? Giving yourself that slight breathing room, if it gives you feeling more comfortable. Even down to that Asia low, which is I think just here, if that's in line. We're talking 1 to 4, very, very rapidly actually even. And then afterwards, so there's equal lows 1 to 4.5, and then down to that, the start of the trendline liquidity and that New York session low. Just move out the way here. We're talking 1 to 7. So almost roughly, if not slightly bigger risk to reward trade, but with more confirmation behind it, which kind of does teach you a really good lesson about patience, right? Yes, the first trade you could call more aggressive style of entry, because it was just a micro breaker structure. We still had no confirmation on, say, a higher time frame point of view, whether it comes to, say, a 5 minute. But we saw the same rules play out: impulse, correctional pullback, and then obviously drop. Same here, once again, impulse, correctional pullback, and then we see that drop. And both trades almost identical in the entry, almost identical with the risk to reward, playing out beautifully. Now, what we see here, to be fair, would have been a potential. I can imagine a lot of people taking this trade and they might have got stopped out. I'll just get rid of the risk to reward now. You've seen those trades. So you have this potential order block here. Now you can see, if I'm not mistaken, I think it just skims the top, which hopefully teaches you the lesson of exactly, it just holds the top actually, which is slightly better. But this is exactly why you've seen on both those two examples I've shown there, why you would leave that breathing room at the very least. So you can see here, if we were to enter this 5,730, we're looking at basically 2 pips being at the top of the box. So imagine if you put your stop loss there, you're stopped out. How annoyed would you be, right? If you give that half a pip breathing room, now it depends on your broker, don't get me wrong, some brokers will have high spreads, you probably get stopped out of that as well. But hopefully you've got a good broker, hopefully your broker gives you decent spreads, and if so, you probably managed to survive that. And once again, you have another trade opportunity where at the equal lows, you're talking 1 to 3, and then by the time you get to that New York low and those equal lows here, we're talking 1 to 7 once again. So there's 3 trades there in one London session, each giving you 1 to 7. So imagine you took all 3, for example, you're talking 21%. Now you would, again, being realistic, being mindful, it's not impossible, of course, not to take all 3 of those trades, because if you've got one view in mind when it comes to your bias, one particular trade idea and bias and direction, should I say, then it makes sense. You're following the bearish flow, you're following the rules. Each one of those trades, again, this one, impulse, correctional pullback into our order block, respected once again. But even just one of those trades, as I was trying to get to, even one of those trades is enough, right? Even one of those trades is more than enough. So just keep that in mind as well. When it comes to this style of trading, the biggest thing that people sort of struggle with and fail upon is controlling their greed and knowing what enough is enough and what's realistic. So many people trade this way, chasing constantly, and they're not profitable, unfortunately, because they're constantly chasing 1 to 20, 30, 40, 50. Even if they're not chasing those big numbers, they're constantly chasing multiple 1 to 5s or 10s, trying to achieve 50% or 100% in a month. It's not realistic, It's not realistic. It's not achievable, long term. So moving off that, we actually come into, I'll just clean up the charts a bit here. Clean up the charts here. Just to obviously point out as well, actually, I forgot something that is important for what we're going to get onto is this key level here from the weekly time frame, right? From a weekly time frame, I will move it ever so slightly higher because, so using that 200, you can see many a times being respected in the past, many times. But that is the most recent weekly, not about monthly. I think it's just weekly. Slightly monthly as well, to be fair. So monthly and weekly key level there. So higher time frame level, that is the closest one to us at the moment. So that is the most relevant. After that, as you can see here from the weekly and monthly, the next ones are down here, quite a distance away. So as of right now, it's very important to keep that in mind also. Going back to where we were though, sorry. So yeah, we had this 1 hour block. You can see that price came just shy of it. If we come down lower as well, we can see that price didn't really give us much else, to be fair, to work off. Yeah, didn't really give us too much else to work off for now. So that's still there. We've seen this impulse move down now, right? So we've seen this impulse move down, starting from up here. We've left that imbalance up there as well. And if we go down to a lower time frame, we can see imbalance started from here, order block been left behind. And once again, price looks like it's retracing, going into New York. So as price plays out, and there might be trades here. There might be trades here. I don't know. Worth looking. What time is it as well? So going into that New York session. But what you can see, which is quite common occurrence, is we'll see price say break a high, so grabbing liquidity, enticing early buyers, take a low, because you can see we haven't had much of a deep retracement, probably on 15 level as well. Yeah, no retracement really on the 15. Price making that higher low, but most people being stuck on the lower time frame, they'll get drawn into shorting now, probably placing sells on this order block here or even up here, and then as you can see, providing that liquidity for that up move, right? So on the 15, we now have come into on the 5 here, we have now come into this order block. Now from the 15 point of view, you have a trade, right? From the 15 point of view, you have one trade here, 5825, stop loss. Once again, same rules. No matter even if it's a higher time frame, I'd still give it that breathing room. So 5 pips, and then targeting that London low and into that 1 hour block. We're talking 1 to 6. So again, 1 to 5, you're done before the structure has to break, right? Before that low has to be done. And that's why, you know, I came up with the 1 to 5 system roughly about a year ago. In about the start of this year, basically end of last year, I came up with that system. It's a very powerful system. It works wonders. So yeah, it's something I'm very proud of. But yeah, as you can see here, this is another reasoning, good lesson, if you will, as to why it's so powerful, is because you can achieve that 1 to 5 without the structure having to break, right? It means you can be in and out, done. Even with this being a higher time frame, slightly higher time frame block, it's not really a higher time frame, it's a 15-minute block, gives a fantastic trade, right? And again, down to that 1 hour block, taking the London low, taking the New York session low as well, we're talking 1 to 6.2. Okay. I'm going to get rid of this one just because we're going to look at a lower time frame entry. So just going to get rid of that one. I'm going to look at a lower time frame entry here. So we'll be looking for a very similar thing. All right. So as price plays out, and we can see it here already. So you see where the impulse came in. Now for me personally, you see this 1 minute here. See this 1 minute here, yeah, so small, right? Now a lot of people might get really happy about that, right? And then be like, look, I can have such a tight stop loss. This risk reward's going to be insane. And again, it's very similar. You might ask, well, it's micro structure, right? So lows there. We obviously have our relative lows here as well, huge impulses. So even for the lower time frames, such as the 5 minute, we're still even then looking for some form of retracement, even on the 15 minute as well, some form of retracement. At this point anyway, from the overall momentum. We've broken structure on the 15 minute as well, so really our understanding should be that we've had a corrective pullback. Our overall bias, daily, weekly, so on, it's all bearish, so we're following the overall momentum as well. Yeah, so that's, again, hopefully if you have that same question about is it slightly aggressive, I understand, but you have to be able to follow the overall momentum, follow the basket of complements rather than just one, right? This one is just for the entry side rather than you're basing our trade on this. That's something you have to keep in mind also. But yeah, a lot of people get very overconfident, or not confident, but like very excited about having, say, a block like that size. For me personally, if I see something like this, I'm definitely incorporating the most recent high. Why? Because on, say, a 30-second time frame, 15-second time frame, we know that the gap between here and here is going to have some form of imbalance. We know that it's going to have it hasn't, retraced, if you will, even into a more premium of that particular candle, right? And plus, I'm not trying to be a gambler. I'm not trying to say, force or purposely try and risk or really go out my way to find a I don't know, 1 pip stop. In this case, I don't know, roughly, yeah, or less than 1 pip, I think there. Yeah, less than 1 pip. I think it's about half a pip, 1 pip. Rather be safe than sorry. Rather be safe than miss a trade or be stopped out of trade, because all that's going to happen in those cases is psychology comes into play. Most people will start to second guess themselves. Most people will start to revenge trade, and that's not it's not something you want to do. So you can do 805, and again, stop loss. Now, bear in mind, you might ask me, Riz, why not incorporate this high? You could, for sure, right? And it's only the difference is minuscule. The only reason I'm not is simply because taking that same principle I've just mentioned, I'm respecting that in the sense that this candle has been retraced into. This candle has been retraced into a premium as well. So therefore, price shouldn't break above there. But to be fair to you, stop loss more than likely is going to end up above there anyway, as you can see. So there's no problem at all. So using that half a pip difference once again. And again, target wise, same as the 15-minute block, would be looking at our 1 hour block or literally the most recent lows. So this particular style of entry, rather than 1 to 6, using a lower time frame, has presented with a over 1 to 10, roughly 1 to 14. So yeah. So as we let price play out, we can see that respects the order block. Again, great. Hopefully a good lesson for you. Price didn't respect that the actual, according to the rules, if you will, order block, probably for that same principle that price didn't retrace deeper into this candle, leaving the imbalance probably on a lower time frame. Price then came up. And again, impulse, corrective pullback, much slower than the impulse down. Then we see the move continue. Then from there, we'll jump up the time frame just so we're not watching a 1 minute. And you can see then price continues with the overall momentum. And yeah, it's great. So 1 to 14. So what was that? 3 1 to 7s and 1 to 14. So 21, 28, 35 roughly in a single day in London and New York. And again, is it impossible for you to do that? No, not at all. Is it possible for you to do that? Yes. Is it realistic for you to do that? Yeah, potentially. Depends if you're following the price action, very clearly, and you have that price understanding. But is it okay not to do that? Of course. That's the real question. Is it okay not to do that? Of course. What's it more important to do? A realistic, consistent return, right? So even rather than going for the higher numbers on all those trades, even if you, let's say, captured all of them with a 1 to 5, how many trades was that? Was it 4? Even with 1 to 4, risking 1%, that's 20%. Still amazing. And maybe that's your plan, to have a strict risk to reward of 1 to 5, for example. Yeah. Whereas when you are in lower time frames, you use pivot to look at premium zone, or you just take the first candle that causes an imbalance and break structure. I'll use a mixture of complements. So even if I want to use a, say, break structure and then back to a premium, so it is another complement. But usually, if we see that impulse and break the structure, for price to get back to that order block, for example, it would need to get to a premium anyway. So I don't really need to place the fib on. What rules do you follow to manage your trades, active trades? It all just depends where the trade's taken from. To be fair, it really depends where the trade's taken from. If it's on a smaller time frame, a higher time frame block. And these are the things you got to think about when it comes to having a trading plan. Majority of people, their trading plans are simply, I trade this pair, this risk to reward is my minimum, and I risk this much, and that's pretty much it. That's as much as their trading plan goes. But really, you got to plan out for as many scenarios as possible, because nothing should be left to chance, right? If we're not trying to be gamblers and we're trying to be traders, you can't leave anything to chance. You got to, the only thing that is chance really is the outcome of your trade, right? The most you can do is do exactly what we've done here. Go over the structures, go over as much detail as possible, get as many confluences as possible. But even then, price could have gone higher, price could have gone lower. We can't control that. All we can do is our best when it comes to putting the edge in our favor. But most people will leave so much to chance, right? They won't have that many confluences. They won't have a well thought out plan. So even as you say, managing trades, plan that out depending on the scenario. So a trade like this, from a higher time frame point of view, especially this last one we just did, is a trade that I would just look to hold because of that 15-minute break, impulse, come back up into order block, reaction. I would look to hold that because it has that higher time frame momentum. While say that first trade we took where it had that micro break, right? That's the sort of trade where I may look to take partials before it reaches, say, my overall target, just in case. But to be fair with that one, we had such strong confluences when it came to liquidity. So after that, let's take a look. We zoom out a bit. As intraday trader or session trader, depends again on your style. There is no one that's better than the other. You can be a scalper, day trader, swing trader. There isn't one that's better than the other, right? There isn't one that's more profitable than the other. Which high time frame we have to consider? there isn't an answer for that. There isn't like, oh, there's a specific time frame you need to follow. Right. So taking a look at price, where are we in price? Let's take a look. So taking a look at price, we can see that this is where we are now, sorry. But where are we when it, well, we can't see, but I believe we're roughly this price action, 2 dojis would be roughly around this sort of region. So key level wise here on the 4 hour, if I can see. I don't think we're this high actually. See this impulse down here. Yeah, roughly around this sort of region. Yeah. Someone was just asking here, have you traded Wyckoff? No, I haven't. I haven't. I know some traders have, and they find it useful. I just never looked in. I've never looked into it deeply. I just find it very confusing. There's so many different segments to it. So much is kind of like guessing until it plays out, which I don't like. But some traders I know trade with it, perfectly fine. So I guess it's a personal choice. I wouldn't like knock it, if you will. But taking a look at this on the 4 hour, if we just zoom back a bit, we can see very nice key level. Price is respected many times in the past. And more importantly, the most recent sort of intraday level, the most recent closest intraday level to the downside that we're going to see. So we can see here, the price has come into that level. I believe, if I'm not mistaken, if we go back to the most recent price action. Yeah, we'll just go back. I'm just going to bring the bar replay so we don't have to start scrolling once again. So we go down lower. Again, this is the closest order block as well, unmitigated from the past. And this is, again, something you can highlight out as a confluences. So we mark this out. Get rid of the bar replay now. And we'll just bring it back to roughly here for the time being, I guess. So now, once again, we have a potential trade on the cards, right? So now New York session has come down lower. Okay. Now this particular trade there is potential for you to hold it longer, by the way, with this trade. The reason being is that the overall structure is bearish. Your structure on the 15-minute is broken structure, lower low, lower high, and you would expect a lower low. So we did make one. I believe they came into the 1 hour block. This is Asia though, so the reason we haven't broken down this trade, really is because in Asia, I don't trade Asia. A lot of people don't trade Asia. Now that's why I didn't cover it. But trade opportunity may have came here short term, and then obviously you can see that continuation to the downside again. Why would we have confidence in this coming down to the downside? Higher time frame overall, and then also that corrective, that slow nature, taking the Asia high, leaving those relative lows and Asia low intact. Previous London session, previous Asia session, even our weekly low as well is on the cards. So price coming into this 1 hour block and key level, the trade becomes bigger obviously, but even just keeping it realistic like we did before is enough, as I said. For price coming into this key level, we see price come in, and we'll drop down to lower time frames now. So we're sat within a 1 hour block. We see price slow down. And now this is very interesting. So this one's more of an aggressive trade, right? The only way you would get into this trade, in my opinion, would have been at sort of towards the end of New York, which is roughly that sort of after that 4 hour, the second to last 4 hour close of the day. There's obviously a trade at the daily close, which for me, I don't think is possible for anyone, because obviously daily close wise spreads, and some brokers have some crazy weird gaps as well. So you can see that nice and cleanly though. Impulse, corrective pullback into the 5 minute block, entry. But again, 10 o'clock close, the likelihood of anyone getting in on the actual order block, you might have pressed buy, but your entry is probably up here, which in the end might give you a good trade, but it's not wise to make that sort of decision. However, deleting that off, there is an aggressive entry for this trade following the same rules. So if we go back here now, so we're sat within our 1 hour block, we see this slowdown in price. We've taken, more importantly, what helps us with this particular trade, which would hopefully give us a slight bit of more confidence, is that weekly low. The weekly low has been taken, previous daily lows have been taken, so a large amount of liquidity has been taken by this point, as I've just mentioned as well, taking previous London session, New York session, so on and so forth. So a lot of liquidity has now been built up. We see this slowdown in price, very nice lateral movement, sideways movement. We then see this impulse, right? We see this impulse to the upside. I think it actually comes, the actual block is nice and clean from the 2 minute. Yeah, so we see this impulse, slight imbalance here, but impulse breaking the minor structure to the left here. We see price come back down, doesn't break out order block. And that might be a way into a trade. Again, extremely aggressive, time of day as well, not the best either. I would imagine a lot of people wouldn't take this trade. Me personally, I probably wouldn't take this trade either. But just to show you the same rules playing out and same principles, that's a potential trade entry. Again, we have to be realistic, because at the end of the day, when that 10 o'clock close happens, if your broker has crazy gaps, you might have gapped down, taking you out, grabbing all that liquidity, stopping out a lot of people. But this would have been the way to get the trade for the low of the day, low of the week, sorry. But yeah, we won't go in further into that one, because again, it's not the best example, right? It's not prime A1. If you gotta go, no worries, man. Hope it's enjoyable. Cool, yo. Otherwise, though, what do we get? So we've broken this structure to the left over here, right? So we've broken structure impulsively in Asia. We've made taken the low of the week as well. So by this point, in our minds, the low of the week's been taken. I'm not sure what day it is by then. Is it Tuesday, Wednesday? Tuesday, Wednesday? I think it's Tuesday. Yeah, Tuesday probably. Now, normally Tuesday is where we set a low or high of the week. So the fact that we've taken the low of the week on a Tuesday is very interesting, because for me, it would tell me that price could look to go higher. How far higher? I wouldn't expect it to say make a new daily high or weekly high, no. But at the end of the day, here on the 15 minute, just as we then took a short move by making a lower low, lower high, we've now made a higher high, looking for a higher low. So here we can see, where did price leave an imbalance and then break to make that structure? We obviously have one at the very low here, right? But we also have one right here, where we actually impulsed and broke this minor structure to the left here, which then led to that overall break structure as well. So you might split your order in this situation. You might wait for a lower time frame break structure as well. Or if you're just using the order block, you then obviously have the order block trade, which is as follows. That's just below. And then more than likely, you would at least be targeting probably the Asia high if it stays intact. We'll have to find out actually. So you can see already the corrective nature, the slower pullback compared to the up move. So we actually do take the Asia high going into London. So this move may come in New York. So New York, we do spike down. I can imagine, a move like this, especially around half 1, I would imagine it was probably fundamentals, which you see happen very often. A lot of people ask me, Riz, what about fundamentals when it comes to order blocks, etc.? Don't you worry about that? But I don't, because I've seen over the, year and a half, 2 years, I've been trading this way now, that majority of the time, I've found that the fundamentals will drive price towards an order block, so towards an entry, or towards more of a target, so more of a TP if I'm already in a trade. So that's why I don't worry about it. That's why I don't worry about it personally. But you see here with this trade, we take the London low, right? So the added confluence there as well. Relative lows are left, nothing too major there, but relative lows left. Taking the Asia low, leaving relative highs at the high as well. Previous London high as well. Equal highs at the high there as well. So we have got a decent amount of liquidity to the upside that has been left behind. So this is why this trade, we'll look at the lower time frame anyway, which I haven't looked at to be fair. But even then you can see nice and clean to be fair. Higher lows being made. So bullish order flow coming into the market. Let price play out a little bit more. Yeah, price moves from there. So your 15-minute block, you might have entered using this block here. Just an impulse, didn't really break any minor structure, so not really anything that you go off. But personally, that 15-minute block, very nice and clean, and could give you that trade, right? Could give you that trade, especially a 1 to 5, and it leads to the recent high rather than, say, structurally wise, though, breaking that high should make a new higher high anyway. But yeah, that's what we'll take a look at. And then to finish off with the chart work, if we take a look at the 15-minute block, so we had an hourly, I believe, up at the high. I think it's maybe this one here, but we'll go down to the 15 rather than wasting time. Go back. So you have this block right here where we actually impulsed from. If you can see, we impulsed from here, right? Actually, to be fair, I think this is the one that we may have already used. No, it's higher. Oh yes, so this is why I marked out that key level. Sorry. So remember that key level that we marked out on the weekly, halfway through almost. So that same key level is for a weekly time frame. So it's not just a daily or 4 hour, 1 hour, 15-minute. It's a significant time frame. It's a weekly, even monthly, as we said as well, time frame that's been respected. So as you can see previously, it's very common to see such a level in this case being respected multiple times, even in the past, multiple times. Actually, price sitting and ranging on it even as well. But it's very common to see that. Now, on top of that, though, we need to go back to higher time frame. So again, kind of going back to what I've been saying this whole time, is a lot of your confluences should come from your higher time frame rather than just your lower time frame. So going back to our higher time frame, we can see a nice 4 hour block on our key level there, which sits very, very nicely, right? 4 hour block right on our key level. This is where we impulsed from, breaking this structure to the left. And then from there, we never retraced back to mitigate that block, and we ended up making a new low. So a lot more confluences for why price may get to there, right? At the end of the day, until we break this high, right, which we've made, which we then eventually do. So you won't really anticipate price getting there until this breaks, right? Once that breaks, it then opens the door. And this is something I've been explaining recently, which is it opens the door to that then being on the cards. Before then, you shouldn't worry about it. You should be worrying about the most recent high. Once we see price doesn't slow down, the momentum, as you can see on the bulls, is there. That's where we then can open the cards to this trade. We will then go down to a lower time frame. We can see even that 4 hour boils down, and we'll go down to a 15-minute as well. You can obviously just use the 4 hour. That's no problem either, to be fair. But yeah, 15-minute wise, we can see nice and clearly where price ended up breaking down from and leaving an unmitigated block. Price is all balanced out except for here, this last block right here, which is very, to be fair, nice and clean. To be fair though as well, you can use this. You could, not can, but you might look at this candle here being the much stronger impulsive move coming from it, or you might be looking at the original move, right? The one that has liquidity behind it. And that is a very powerful lesson as well to try and take away, is if you notice this candle here, yeah, slightly equal highs and the previous Asia high as well. This candle here that I mentioned, what is that? There's no liquidity really next to it. There's this New York session, to be fair, here, relative highs, but which one has the most liquidity behind it? We have relative New York highs. We have the trendline liquidity across here, all these equal highs, and the Asia high, and then the start of the actual move, right? With an unmitigated block. Okay, unmitigated block, impulse. Price then continues with the bearish flow, not mitigating the same block, leaving a lot of liquidity above those areas. So all of these leaving liquidity above Asia session, New York session, leaving liquidity above, more than likely a lot of daily highs as well. And then I don't think we brought the price back yet, but we'll let price come out. And as we can see, price ever so slightly tapping in, respecting that key level from the weekly time frame, and then has given a slight a very decent move, to be fair. If we just take a look, we can see really about 5.5 pips, and yeah, so 1 to 5, 1 to 6, or just under 1 to 4.5 maybe. Decent trade for London. What time did that come actually? London 10:30, 10:15, 10:30. So yeah, quite a decent trade there. I'm not sure if there's any lower time frame confirmation for that one. I haven't actually looked for that. Oh, 1 minute wise, nothing. Yeah, you can see, look, if this is where, again, it depends what price gives you. So kind of reverting back to one of the questions earlier, do you just do this? No, because not always will price give you that. you can see we do get a nice slowdown, right? We leave equals here, so we can see something's on the cards, but price didn't give us a break of even a minor structure to then give us a corrected pullback to enter. So really, this particular trade, 15-minute, would have been the way into that trade. Even afterwards, retracement wise for the 1 minute here, not really much entry wise to the left. There might be one here, but depends how confident you are in the particular move comparing to the previous ones. This one makes a slight bit of sense. We have obviously those equal highs there. I think from a 5-minute perspective, we have a nice block. It's a bit clearer. We see impulse, which led to this breaker structure to the left here. So that makes sense. But otherwise, yeah, I would say it's been a good week, and it was a very nice week, especially the beginning. It's those first trades on a Monday were some of the cleanest trades that I would say that you could find. And I'm one of the type of peoples anyway, and learned from my mistakes in the past, where you're sort of rushing or having a good Monday, good start to the week, and then just continuing to trade, right? And then suddenly you're out of focus. Maybe your egos come into it. Maybe you take 1 or 2 losses, and suddenly you're not feeling as good as you were on Monday. So you've gone from this high, now you're back at this low, and it's impacting your psychology. I'm the type where if I have a really good Monday or Tuesday, for example, I'm done. I'll finish with a week. I don't care what else happens. Like, look, there's a good long move there. I didn't have as much confirmations as a Monday, but possible to take, yeah. But is it worth taking? Maybe not. Same with that short move that we just done. Possible to take, yes. Is it worth taking? Maybe not, right? So these are the sort of questions and things you got to think about. Please talk about trade and management. What about trade management? There's a lot we can talk about trade management. But what in particular? Any questions, by the way? Was that helpful, by the way, guys? Obviously, I know there's a lot of you might be new to you, might not trade this way. As I said, I think I would assume that a lot of you, trade that way. Nowadays, to be fair, I feel like a lot of people have adopted this style of trading. Very helpful. It's good to hear. 1 second, let me just go back on the chart. There, someone just asked about, are you long on EU? Sorry. So the 4 hour for me, as we pointed out, could be bullish now. Could be. Doesn't mean it is yet. No, just because, as I said, it really depends on. So daily wise, we've kept the structure. Obviously, parent time frame more important than the 4 hour. So keep that in mind. Weekly as well, weekly closure. See how that goes. But ideally, 4 hour wise, we have seen an impulse. The bulls have been in control. We'll see how slow this pullback is. We'll see how we close tomorrow. But I could see that on the cards potentially to get into, as I said, this order block up here, which would make sense for the daily, which would make sense for the quarterly and the monthly. But then to overall, I still see price coming down to these sort of levels, at the least. That's my opinion. But we'll see how that goes. What we got here. Do you have any tips for a student in his final year who can't always be consistent but still try to make a way into Forex? I would probably say, two things. If you don't have all the time and the inconsistency is due to the time and the restraints from being a student, and not having the time on the charts, or not being able to be on the chart, should I say, then you're better off just being patient, not trying to do live trading or challenges or anything like that. Be patient. Just paper trade when you can, demo trade when you can, and basically hone your skills, sharpen your tools until you can give the proper time. No point throwing money away. No point taking unnecessary losses when you can do that. If there's a way where you can trade, say, one very specific session, say London, for example, and still manage your university, then do that. Focus just on that particular session. Don't overdo it. Don't try and do something that is just going to create friction in your life. That would be my advice. Which pairs are best for this style of trading? Apart from me, there isn't really any pairs that are best for this style of trading. This style of trading works on any pair. It's just about you being disciplined enough to follow through with it, and also obviously understanding the pair that you're trading. EU is a very nice one, but there is no best pairs to trade. And if I wouldn't say it's even very nice. It's just it's a good pair that works, just like any other pair. what do you trade always? I mainly trade EU and gold, mainly EU nowadays, to be fair. Can you teach that how to look structure for intraday trader? Not really. Well, I can. Obviously, we do that as part of the Viper group. So obviously, one thing I will say is obviously if this style of trading, or you want to learn more in depth about exactly how we trade and obviously actually be a member and be a mentor, be on webinars, because this is a free webinar. We do webinars every single day, Monday, Tuesday, Wednesday, Thursday, Friday, every week. So if it's something you're interested in, then we have the Viper platform. I'll put the link in the chat. Yeah. Okay, go check it out. There's loads of options now that we've done. So feel free to obviously look at that. Well, if you want, there's a free webinar on structure, like I said at the beginning, on YouTube, on my YouTube. So feel free to watch that as well. Quick question about the Viper Advanced program. Would you be updating the course with regular videos? So you'll get case studies every week, at least one case study every week. And then obviously any updates to the strategy, and yeah, it will get updated as well. In a day trading perspective, do you look at 1 hour break of structure or 15? Both are day trading wise, both are usable, and probably will happen more often than not. 1 hour's break quite often, 15-minute obviously more often. So yeah, both are usable for day trading, to be fair. Do you determine the break structure by the wick or the close of the candle? Me personally, I use the wick, because wicks are just bodies on lower time frames. So me personally, I use the wick. It is the thing with trading. You have to realize is it's not up for interpretation, but it's perception. It's based on what you see, and that's one of the hardest things that people struggle to grasp. Is it's about you. So like me breaking down all these trades you just saw today, that's great. You've seen how I see the market. The best thing you can possibly do is go on the charts and then see how you would do the same trades. And that's what's going to help you, because that's what you're going to be able to see moving forward rather than what I see moving forward, if that makes sense. Can you tell us a bit about the advanced program, please? Advanced program, you can see it all on the site. There is a chart, so it's quite easy to see, to be fair. The advanced program is obviously the course videos, the PDFs, and part of a Discord group that we need to go live still with the Discord side. But yeah. Does this involve supply and demand concept? Not that I know of. Some people may refer to it as supply and demand, but not that I know of, or not that I call it that personally. So I would say no. Some might say yeah. What about words of wisdom? What about it? As in, do you want words of wisdom, or what do you mean? I don't understand. I'm sorry. Do you mentor complete beginners? Ideally not. Like obviously, complete beginners can get, say, the PDF package on the platform, but like when it comes to the elite side of things, where we do one-to-one mentoring, we don't take on complete beginners, because that takes a lot of time to get you to obviously learn, say, candlesticks and what the forex market is and so on and so forth. You're better off learning a lot of that for free online. There's many resources out there, and then coming to us after if you want to learn more in depth and obviously more advanced stuff here. Would one be getting support on an advanced program? You would. Obviously, it won't be one-to-one. You would be part of a Q&A webinar, I believe every Friday, and then obviously the Discord as well. But one-to-one is obviously for the elite. Obviously, right now all we have is elite members. We have a few members who have joined obviously over the last week, but the majority of our members are all elite members, because we started with just one-to-one mentoring. That, to be fair, is what we advise for. That is what we advise anyway. Having a mentor really makes that difference, that one-to-one guidance. But those were just ways to be able to join us, learn the strategy, be a part of the community, more importantly, to be able to come to Viper meetups, for example, as well. So yeah. Is there a price for just joining the daily webinars in your group? Nope, it's not. You make it look easy. I wish, man. The thing is, like, there was a time where I was just like everyone else. There was a time when I was just like all of you. I've said it many times. You probably would have heard in many of the YouTube videos. Before I became consistent, I'd lost over £50,000, spent thousands on different courses, and it was I had to sit down and think, like, is trading for me? It got to that point. So don't feel like I'm up here, for example, and you're here or anything like that. We all have to go through this journey. the only way to get through it is through not trial and error, but don't get me wrong, having a good mentor really helps. Now, unfortunately, I didn't get to have one for so long on my journey. Many of you will know that there's so many fakes out there who look so real and use obviously the social media to their advantage, which is so unfortunate. And if you try and hopefully you notice that we try to be completely opposite of that. Don't get me wrong, we do get fancy meetup videos and stuff, but that's just really for the fun of it, to be honest with you. It's fun to do that. It's fun to create a nice memory, if you will, with our members. But when it comes to the trading side, we don't try and show off profits. We don't try and show off a lifestyle, because that's not what trading is about. Trading is about the actual skill itself. Yeah. Jamie, join peeps, you won't be disappointed. Appreciate that, man. We need to catch you at the Christmas meetup, man, the Christmas party. I have to make it a big one. Joining the Vipers has changed my whole chart perspective and my life, to be honest. I appreciate it as well, Khalil. I can't wait to see you. You're going to come out to Toronto next month. If anyone in here is a non-member, I'm going to be in Toronto next month. So yeah, keep an eye out. Can you upload any one case study in YouTube? No. That's not how this works. To be fair though, if I don't know if you've even looked about YouTube, but the last 2 videos I did were basically case studies. I didn't teach obviously the concepts, but they're case studies, so you can always check them out. What was the other one? Do you get into the daily webinars in the advanced course, or do you need to be in the elite one for that? There's professional and elite. I think they have the webinars. The advanced one has the Q&A webinar. The Q&A webinar only on Friday. But the professional and advanced have and the elite, sorry, they have all the everything, all the webinars. Just the professional doesn't have the one-to-one aspect to it. Do you do live trading with your community? So we do a live trading call. Now at the moment, that's the way where that's timed is where we basically, there's not normally any trade setups, but we have ended up analyzing the markets where we've given order blocks, for example, or entries that then play out, or just like I did today, to be fair, with like the Euro USD, where I see this going, for example. But we're looking to do actual New York live session trading. Well, I'm looking to do anyway, live New York session trading for our elite members. Hopefully, what's the month now? October. Hopefully somewhere mid next month, end of next month. Thank you so much for this webinar. Very helpful. I'm glad. Thank you, Riz. Amazing webinar. I'm glad. That's what it's all about. What are the things that you consider as liquidity? You've seen in this webinar. You saw, basically all those trades that we broke down, we used as liquidity. Is it possible to get the recording was working and didn't get to see the first 20 minutes of the breakdown? We'll see what we can do. See what we can do. See what we do. Just message me. Is it one-time payment? Yeah. You can see a lot of these questions you can see on the website, guys. Just to let you know, obviously the website has all the information. We're very transparent. We put all the prices there, everything that's included, because we don't want to be like these guys who try and sale call you, get you to call their call center and then convince you to buy something. Nah, like we're just about like, if you want to join us, you want to be part of us, you like what we're about, you like the community, and want to be part of a good community with real people, then you can. If you don't want to, that's no problem either. Like, we're not here to market or sell. I'll be honest with you, one major thing that people ask a lot is like, why do you mentor? Why do you do this? The only reason I do it is literally because of all these, scammers and fakes out there. I would have so much more free time if I didn't do it, right? I would have so much more time to trade, to trade and to spend time with my family. I get so much, like today, I was getting so much aggro for being on my phone so much over the last week, where I'm literally replying to messages, doing a webinar, doing this, doing that. Like, honestly, I would love nothing more than to just go live my life, just trade, do my property stuff, do my investing, and that's it. But fortunately and unfortunately, because obviously love mentoring as well, love the community, love all the people that we work with and all the connections and the great feeling. Even the non-members, for example, hopefully you'll be able to say, from the meetup last week, we love that vibe, that energy you get from that that is why we do this. That's what's so motivating about it. But yeah, of course, like, you know, it would be great as well just to be able to live, not have to worry about doing a webinar for today to you know, push everyone and to make a case study to help everyone and so on. But that's what we do it for, you know. I see so many people struggling, like I did at one point, because they are paying wrong people. They're paying people who lifestyle market, who have no results, you know, and it's unfortunate. You know, it's unfortunate because no one's stopping them. There's Instagram aren't helping because they just let people create scam pages, and you know, the actual, you know, financial conduct authority, for example, don't help because they don't stop these bad companies, you know, even if they get reported. And people are just allowed to lifestyle market, show a fake life that isn't actually from trading, and it isn't how you become a trader. So that's where the motivation to start the Vipers and to do something came from, to be something real, to try and give as much value as possible. That's our ethos, if you will. That's actually what we're going to post, actually. But if you did enjoy this, obviously feel free to, and if you want to see more free webinars, be sure to tag me on Insta and the Viper group, and let me know if you want to see more free webinars. Obviously, I know my members, especially my elite members right now, they won't be happy about it, so they might tell me not to, which is fair enough as well, to be fair. So yeah, I might have to not do that. But yeah, what was some of the questions here? Sorry, just before we get going. If I join the 600 package and later, if I want to upgrade to the package, should I pay? No. So if you buy, let's say, one of the lowest one, and you want to upgrade to the next one, you just pay the difference. You don't have to pay. Again, we're not like money hungry. You know what I mean? Like, just pay the value. That's what we've tried to set it, so it's what it's worth for the value you're gonna get. That's all we're about. Fair exchange. You know, for the amount of time. So, for example, the elite, for example, people pay right now. It's on for 3.5K. That's 12 months of our one-to-one time. Right, 12 months of us answering questions, getting on calls, reviewing your trades, and so on and so forth. That is so much time. And for me personally, I know 3.5K is a lot of money. It is a lot of money. No word of lie. Like, I know that. But for the amount of time and energy we put in, for me, it's like it's undervalued because I know how much. Like, I underestimated how much I would have to put in, but I'll still do it because that's what we're willing to do. You know, the beauty of it is seeing the results at the end of it, seeing people's lives changing, seeing people get consistent, seeing people improve their quality of life, improve their family's quality of life. That is what it's all about at the end of the day. It's not about if that person can go buy a Rolex, if that person can go buy a car. For me, it's about when I get messages saying I was able to pay my mum's rent for the next 3 months, so I was able to pay my mum's debts off or my debts off, or I was able to do this, do that. You know, they're the things that really make it really worth it. How long is the discount on for? Probably to the end of the month, maybe end of the month. Yeah. Thank you, Riz. I did take your trades on Monday. Now I understand better. That's great, man. Great to hear, man. And hopefully you'll look to join us in some way. Hopefully catch you at another Viper event. Which percentage of your students are really profitable and consistent? How much time do you think it takes to get there? Percentage-wise, I'm not sure. But there's a decent number who are there. There's obviously a decent number who aren't there yet, but are really on that edge, and we're still working with them. The beauty with what we do, and the thing I'm proud of most, is that we don't give up on people. You know, we don't stop answering messages or stop responding to people or anything like that. Never. We are probably even more motivated to help them because we want to see it. But time-wise, it really depends. I've seen people who've joined and within the first 2 months are consistent and showing great results. But then I've seen people who've maybe been members for 6 months, which is how long we've been around, to be fair, and they might not be still quite there yet. But again, it's really down to the discipline, the plan, the things that we can show you the way. We can give you all the information you need to be profitable. What we do in the Vipers is we share everything that we do. We don't hide nothing. There's no hidden golden key that we keep to ourselves. We share everything, such as the key levels. As an example, I only started introducing that into my trading about a month and a half ago, tested it, worked well, gave it a little bit more clarity, a bit more higher potential trades. Within 2 weeks, 3 weeks, shared in the Vipers on the webinars, right? For example, that's how we are. So it really depends on the individual as well. I would always say normally on average 3 to 6 months, but that wouldn't be fair. You know, I would say 6 to 9 months is probably more realistic for the majority of people, but there are always going to be those people who take to it more well and have a lot more time maybe to put in a lot more work. So yeah, it all just depends. You have to pay it forward, 100%, man, 100% tricks. Plus your students are doing great, like SM Trader, wow, and the rest of them. Yeah, man, SM's doing amazing. absolute legend. Yeah, killing gold, and that's another example of just one pair, trading one pair, understanding one pair, understanding trying to get just two movements, for example, in a day, and just being, more importantly, ultra disciplined. He, to be fair, is a great example of someone who joined and within, I think, a month or two was just flying away, and it was great to see, and it's still great to see, to be fair. Thanks, Chris, for making time to give this webinar. You gave some new insights. Great to hear. Legends. Nice one, Antonio, man. Hope Saturday was good. For a beginner, is it advisable to first pay the 600 then after going through an update? Yeah, as a beginner, for sure. Like, I would say, like, don't rush into the elite, because you want to utilize that time to the best of your advantage. Yeah. Thanks for taking time to do this webinar. No worries. And we'll use this as a last question. From a scalping point of view, so you mainly look for 1 hour and 15-minute OVs, and then look for entries in 5-minute or 3-minute, for 1 hour and 1 minute 15 minutes. No, because it's not about order blocks. It's not about order blocks. As I said earlier, that's just a way of entry. It's about everything. It's about everything as a basket of confluences. The biggest reason people probably struggle and don't do well with this strategy is because of order blocks. And that's the truth. And even though one of the best ways of people being profitable is also the order blocks, to be fair, it's also the biggest downfall, because people will just assume that it's the order blocks that are important, but it's not. That's just the way of entry. Will the price still be 3,500 forever? No, it won't be, actually. As I just said, I believe it's undervalued. We put it on as 3,500 just as that's what it was before, and then also the platform, but it will go up probably end of the month. Probably end of the month, just because, as I said, the amount of time and effort that goes into it, it's undervalued, and for it to be like fair exchange for us, it's going to go up. But again, there's no pressure to buy it or anything like that. It's simply your choice. If it's something you want to do, and I don't believe anyone has regretted it up till now, not had any negative feedback up till now either. So obviously, if they want, and even to this day, we welcome feedback. If there's any bad feedback, anything like that, let us know. We only want to do, the whole reason we're doing this is to help people. So if we're not doing our job of helping people, we need to know. Most definitely undervalued. Thank you for your time, Riz. I love being part of the Vipers. Appreciate you, man. Really do appreciate you. I'm excited to meet you, obviously, next month. 3-4 weeks, right? 3-4 weeks. It's gonna be great. Jamie, cheapest chips. Oh man, it's good, man. There's good perception. If you want to have like words of wisdom, someone mentioned earlier, it's good perception, right? For some people, 3.5K is a lot. Now, don't get me wrong. Even Jamie saying cheapest chips, you'll still know that 3.5K is a lot of money, but he understands that the value and what he gets access to, and all of the benefits trumps obviously the amount, or at least makes it worth it. While there'll be others who will, no matter what they see, no matter even this webinar showing them an insight of how you can make 21% in a day, and even more, like 30% in a day, for example, or over 2 days. And you have to realize that 30% on, say, even a 100K account, $30,000 or pounds. Being able to learn that skill and hone that skill and do that repeatable, is it not worth 3.5, 4, 5K, for example? When it's real, of course. Don't get me wrong, people will say that to you and they'll be fake as hell. Doing a lifestyle market to trap you in, like, look at this Lamborghini I got, look at this trading floor. A lot of people say to me, are you going to open a trading floor? No, there's no point. What's the point of me opening a trading floor? What use is there to a trading floor other than to market that I have a trading floor and try and entice you to join me so you can sit on the floor, right? Makes no sense, right? When we can do everything on Zoom. I've just shown you all the charts, the whole week breakdown of trades on a pair, all on Zoom, for example. You don't need a trading floor, right? So if you ever want to know what to look out for to avoid obviously getting scammed or anything like that, look out for trading floors and supercars. They're the biggest ones. Like your Lamborghinis, your Ferraris, and all that. But yeah. Don't get me wrong, there are real people out there. They're very few, unfortunately. But I'm hoping that, another part of us doing this is hoping that there'll be more real people turning up. More real people getting some limelight, if you will, and making an impact, because this industry really needs it. It really needs it. It's very unfortunate. We see so many people, especially, and the most unfortunate thing is normally young people, 20s and 30s, who are trading, right? And 20s and 30s when they're in their prime years to really, push themselves and really grind at something and make a success of themselves, and then they're getting tricked and duped by fake people and getting scammed, and it's only knocking their confidence, knocking their vision. The amount of people who probably gone into depression, committed suicide, and maybe even been completely put off their dreams because of all these guys who just rob people. It's disgusting, really disgusting. But yeah, don't want to leave it on a downer, do we? So we don't want to leave it on a downer. So hopefully that was an enjoyable webinar. It was really great for me. I really enjoyed it. Like I said, feel free to tag me if you want to see them more often. If you really enjoyed it, let me know. And if you have any questions about joining the Vipers, then of course drop me a DM. I'm more than happy to answer your questions. And just really check out the website, because the website has all the information on there. Guys must have joined to us. Thanks so much. We'll speak soon. Yeah, no worries. And Vipers, obviously we got our Q&A tomorrow, so I'll catch you on there. And yeah, excited for next week. We're gonna be way more active. We've got so much great stuff coming next week. So yeah, no worries. Thank you guys. Catch you on the next one, if there's a next one. Catch the Vipers on the next one. Take care.